Hi, friends. Chris Kelly here. Hey, it's that time of the week. Couple things. Number one, let's look at stats, look at some data, figure out what's showing up in the numbers. What's the marketplace look like based on the numbers? And then I wanted to talk a little bit about looking backwards. Looking backwards at what we were looking at looking forwards. That'll make more sense in a minute. So, first of all, let's get to, I guess I've already minimized the screen, so let's get to the numbers here. New listings, a nice number this week. And again, I kind of expect that number to come up and maybe get up over 1,000 here going forward. So we might, coming into a holiday weekend, we might have some slower activity just because that happens so often. But all in all, this is going to happen. Now, the differential between this and this, and the differential between this and this, sold listings, I mean, this really reflects, the pause in the market on the front end of interest rates adjusting. So, and I've talked about that a little bit. So not surprising to see this. And not surprising really to see this spread. Again, that's an overall reflection of a bit of a pause in the market. Some people have gotten into contract and are electing to get out of contract. Some people are just waiting to get into contract, waiting to do anything. So that's really what that is. I mean, again, you come down here to average and median days on the market. Of the properties that are going pending, they're still doing so on average at a pretty fast clip. So that hasn't really changed much. If you look at these over the last period of many months, even years, this is what it's looked like for the past year plus. And again, these numbers coming up, this right here numerically defines, or I should say, speaks clearly to the fact that real estate pricing may not be appreciating at the same rate that it has been, but it isn't coming down because these numbers would physically come down and they would continue to come down. It happened for a week. But again, you can never, for a week or two even, you can never really make a determination in and of itself about a week's worth of activity. That's why I always talk about the trending and the nature of what's been going on over time. It's always important to look at data over a course of a week, but you need to look at it in context when you're really trying to determine where things are going. So the long and short of it is this pricing overall hasn't been going down. And the velocity of sales, how fast things are selling, hasn't been going up. That's really the next thing that happens when the market cools more, is these numbers go up. And if they cool enough, these numbers might even come down at some point. But like I said, there's a lot of things that have to happen before this part starts getting affected long term or more permanently. So again, all in all, it remains a robust market. It feels different, that's for darn sure. I mean, there's a lot less of, hey, we're going to price it at 450 knowing it's going to sell for 550 or whatever the numbers are. That ship has sailed in a lot of parts of the marketplace. We're starting to see sellers offer money towards a rate buy down, which is just another way of offering money towards closing costs. But in a time of rising interest rates, that's a smart decision to make. Helping somebody buy something at a lower rate helps it be more affordable over the long term. So you're starting to see that play happen more with sellers and by sellers agents. So that's kind of the numbers. I'll keep it fairly short and sweet. But there's an article I'm going to attach a link to by a prominent local economist, Bill Connerly, and I get his information from one of my dear friends, Scott Stevenson, over time. Scott had sent me this article, gosh, I think he sent it to me a year ago. It was from July of last year, so it was about a year ago. And he talks specifically about the market and where it's going. And the heading of the article is, "The end of the housing boom will be when mortgage rates rise in 2022. This was put out in the middle of 2021. Well, look where we are. Mortgage rates rose and the housing boom as a boom ended. That doesn't mean we went into a crash or even a decline. It just means the boom has stopped being a boom. So very good read, very worth your time if you're interested in really understanding what is happening with the market versus what the people. This is just one person of a few that I listen to. And they all have basically been saying the same thing for the last couple of years. Look, this is going to happen. Here's how it's going to happen. Here's what it's going to look like. Now, the thing they can't know that there's going to be a war in Ukraine. They can't know that fuel prices globally are going to do what they've done. There's those kinds of variables affect the degree to which inflation happens. It affects the degree to which interest rates change. And it ultimately affects the degree to which the Federal Reserve starts pushing and pulling the levers in order to mitigate inflation and these kinds of problems. So there's nothing political in that. That's just the mechanisms at work that manage the economy. And I'm not an economic professor or expert. I'm just a real estate guy that tries my best to look at information that isn't designed to sell news, but is designed to inform and then convey some of it to you. So what I found interesting and really worthy of talking about this week is I just happened upon this article really randomly, and I thought, gosh, that's great and then I started looking at some of the other things that I had been reading a year ago and the things I had put out a year ago and even 2 years ago. And they talked about these timelines basically, and this happening. Interest rates are going to go back up. The market's going to slow. And this is basically when it's going to happen. So that's what's happening. So I say that because it's, a lot of times people call this shocking and surprising. It's none of the above. So anyway, just wanted to get this out to you. And then of course, I'm going to make sure I get this out for the next few weeks. The 20th annual Kelly Marketing Group Client Picnic. It's happening on August 20th in the park behind our house where I've done it for the last 20 years, and it's just a great time. It really is. So if you'd like to know more about it, we can certainly. You can find it on my Facebook page, or certainly I can send you some information. But would love to have you. It's there's no cost. It's just a lot of fun. Water rides, great food, and really good company. So we've got a great band that plays. It's just fun for a real family fun event. So anyway, I wanted to make sure we put that out to you. And that said, I'll let you go for the week. So as I always say, until the next time.